What up, ladies and gentlemen? This is Jimmy here. Thank you so much for watching this masterclass. This is part three. So I started with part one. Part one was all about having a mental framework, having the right psychology, the trading psychology for selling in a bull market. Because eventually, in a bull market, you want to scale out, you want to take profit. And I shared my principles. If you have missed out on part one, I highly encourage you to go back, skip this one, watch part one, because then everything will make sense. Also, part two was all about the indicators and my strategy I'm using to scale out and how I'm taking profit. There's one guarantee in trading, and that's this: if you don't have a plan for profit taking in this bull cycle, you're setting yourself up for some serious face palming later. This is exactly what I have shared in part one. Now, you see this phrase in this bull cycle, you can change this and replace this with this trade or this trade setup or this investment, because you need to have a profit taking strategy and you need to understand where you're wrong. We all should understand by now, and you will fully understand this also from a psychological and a neurological perspective, that selling is mentally and psychologically harder than buying. You can replace your selling also with the word exiting. Like, you can also exiting a short position is mentally and psychologically harder than the moment you entered that short position, because the different biases, they just can creep in over time. So let's go back to the basics. I all understand, many of you, 90% understand what a stop loss is, but still I want to go back to the basic and then build from there. I'm gonna keep it short and to the point, and fear not, we're gonna make this video very practical, so you can execute this right after this recording, after this video. You can, practice this in a testnet environment or in a real environment. That's up to you. So what's actually stop loss? Very easy. It's actually a forced sell or buy, depends if you're long or short, because if you go long and you are in the wrong, you want to sell. If you're shorting and you are in the wrong, your stop loss is actually a buy order. So understand this mechanism. Hope this makes sense. If it doesn't, let me know in the comment, and I might make a separate video about this. So, what is actually like another way to see how to approach a stop loss? It's actually your point, your personal point of invalidation. This is a very important definition, because this shows that you know that at this point you're wrong. My principle, my mantra here is, if you don't know when you're wrong, you'll be always in the wrong. And this is a terrible, really a terrible place to be. You don't want to be in the wrong for a long time, because that is the one of the reasons why people are losing a lot of money. Don't let your ego dictate your behavior. Have a system in place. Don't go for randomness. You always need to understand your point of invalidation, period. And if you don't know your point of invalidation, you'll be invalidated for the rest of your trading, crypto trading journey. Hope this makes sense. So now, why is having actually a stop loss so difficult, or practicing risk management? There's like a phenomena. There is a bias. We call this the loss aversion bias, and this is probably one of the stronger biases out there. And I believe loss aversion bias is a strong expression of fear. Fear is the strongest emotion we have because it's our survival mechanism. What is it telling us? What is it actually telling us? It's actually telling us that whenever we experience a loss, this impacts the brain 2 up to 3 times more than when we are winning a trade, because it activates your amygdala, which is actually responsible for your fight, flight, freeze mechanism, your insula. It's actually it triggers your feeling of disgust, and I'm pretty sure those who haven't used the stop loss, especially with trading, by using leverage, getting liquidated, uh, recall that feeling being getting liquidated. It's not only you getting angry, but I'm pretty sure most of you also felt this feeling of disgust. Disgust is also one of the stronger emotions. What you need to know, what we both should understand, is you and I, neurologically, psychologically, we do not treat a loss and a win equally. So we don't see it like as a linear thing. If you lose $100 in a trade, you that feeling is 2 3 times stronger than winning. So basically, you need to win 2 3 times to offset that feeling. So that's how strong loss aversion is. And I believe that's also one of the reasons why people have a big issue with actually practicing a stop loss and or selling a position when it's going against them. So understand this. You also should understand the percentage of law is also going against any trader and investor. What do I mean by that is, if loss aversion really kicks in, your ego is not allowing you to sell. Let me give you here an example. Imagine you are this much down, like 20%, or even let's exaggerate a little bit. Okay, imagine you're 35% down. I hope you can see my screen. Let me make this a little bit bigger. Let me maybe go to the daily chart. Um, Not sure if I can make this thingy like a little bit bigger label. Yeah, here. Well, if you're 34% down, you know how much you need to go up um, to get back at break even. 52%. So this is what I mean. Law of percentage is always against you. Always. But then also really always. Therefore, rationally, we need to rewire and reprogram ourselves that we should treat like a win as equally as a win, as a loss. Sounds very simplistic, really, but it isn't easy. It ain't easy. It's not easy. You have like your psychology is actually going against you in this regard. So now let's make it a little bit more practical. We covered like the mindset, the psychology, the trading psychology around stop losses and why it's so difficult. Now there are a few ways how to use like a stop loss. It's one of them is below a obvious swing low, but this has some cons. This has some there are some things you need also to take into consideration. Uh, we will discuss them in the chart. Another way is adding like a 1 ATR, and I will explain what it is, below your initial stop loss. Another way is using like 3 or 4. It depends on the volatility of the market. You can even do like 2 um, ATR, but not from your stop loss, but from your initial like entry. And another thing I want to highlight is avoid the obvious. Remember this. I will circle back to this. Avoid the obvious. So let's quickly check the charts. We can delete this one. So I hope that you guys now understand the law of percentage goes against you. This thingy here is the Bitcoin chart. made a lot of people depressed, especially those who are holding altcoins, but this is not the topic of today. This is Bitcoin in a range bound environment. And imagine you are checking the 4 hour chart, and you see this this was like a breakdown. We recovered. We're back here at this green zone. You mark this as a solid as an SNR level. You know what I will do? I'm gonna remove myself because I want you guys to fully focus on this chart. And you told yourself, okay, if we're gonna take out this low here, I might want to look for an entry. And imagine we are let's say here. So you indicated this level as a specific, SNR level. You've set your alerts, and then your strategy is if Bitcoin goes down and it takes out a low, and it's then back again here in this green zone, I want to enter this trade. Now the question is, where do you want to put your stop loss? So a lot of people, like, the obvious is, I'm gonna add my stop loss, just below this thing here, and then I want to enter this trade. It's not per se wrong, but you should understand you're not the only trader. You're not the only market participant. There are many, many other people watching the same chart, on the 4 hour. A lot of people are using horizontals. So then in this case, you might want to use the ATR because you found this setup and you're aiming for, let's say, 59K. I'm just saying something here. You want to enter it when it's in the green zone and then having like a stop loss, and this would give you, let's do it a little bit more perfect, as in perfect numbers, round numbers, like almost. You're aiming like for this 3 R. Um, this is a way to go. However, you can also apply like an ATR and then add this or subtract this from your entry. So imagine this is your this is your stop loss, like just below, slightly below this thing here. Uh, there could be the high probability that you got stopped out. Wait, my ATR is here for 2 times. We don't want to have it like 2 times. And imagine you want to do like more like a lower time frame trade. This is something you want to consider. Why is it so? Yeah, I know why it's so big, because I switched from the 4 hour to the 1 hour. So this is the ATR. So it has a look back period of 14 candles, right? So if it is on the 4 hour, it's actually 14, the previous 14 4 hour sessions. If you do this on the 1 hour, it's the previous the length is, the look back period is 14 1 hour sessions, and it basically measures the volatility. So the volatility here is at the moment $370. So imagine this is your stop loss around let's say 56,000. We're gonna round this up, okay? You don't personally need to be very, very how do you call that, like rigid with this. It's just the idea. And the ATR is 410. Let's round this down to 400. 56. That would give your, that would let's do it the rigid way, by the way. So imagine you have 55,900 minus the 407. Then you want to have your stop loss around this number here. 50, what was it again? 55,553. So then you go here, and your stop loss would be 55583. As you can see, it now is sitting here. So by using one ATR, basically the value of the ATR, you subtract this from your initial stop loss. That this gives you like your final stop loss. So let's do the replay button, and it goes down, down, down. Oh, then as you can see here, uh, you have been protected here. So you did not get stopped out by adding that one ATR, no, sorry, by subtracting the one ATR from your stop loss. Like another thing you could do is, okay, you know your entry, but you do not know your stop loss. So what you could do is having your entry, for example, in this case, it's 50. Let me use my calculator here. I think you guys cannot see my calculator, but it doesn't matter. You like the entry you want to say around, that's like a beautiful number of 56,000. Oh, 56,500, and then minus the 3 ATR. So that's, let's say, one ATR is, wait, sorry guys. Let's say like one ATR is 400, okay? And then you subtract 1200 from this. Oh, that's the wrong screen. And this would give you a stop loss of 55,300. So again, you can, for example, this is like, it's like one ATR below your initial stop loss, but you could also like do like a two ATR below your initial stop loss. It depends how volatile the market is and your risk appetite. Another way is to work with the ATRs, but then starting from your initial entry. Um, Another thing, and this is the last thing, I hope this makes sense. Avoid the obvious. The obvious here is, what's the obvious here? The obvious here is people, they see this and they might want to put their stop loss like below this low here, right? Um, so I'll try to avoid this. If it is really obvious for you, most likely, in, although you're very special, it's also very obvious for other people. I hope you guys enjoyed this quick mini stop loss video. Again, trading psychology first. We need to understand the mindset, the mechanism. You need to understand your brain, why setting a stop loss is difficult, why losing is difficult. I truly understand. I fully believe if you fully understand this, then having acceptance with getting stopped out might be more bearable. And again, um, by using the ATR technique and avoid the obvious, there is a high probability that you will get stopped out less often, less frequent. This is all for today. Thank you so much, guys, for listening to me. And leave a comment, smash the like button, and I'm doing this for you guys. Smash the like button, give this a like, leave a comment. We read every comment. Leave a comment, share this with your friend. Take this very serious. Go back to part 1 and 2 if you have missed them. If you guys have any requests, any questions, let me know as well. Until the next time, see you around.